Okay, Vaidyanathan, founder and chairman of Capital First, now joins us. Vaidyanathan, good morning and thank you for joining us. If I look at the recent bulk deals or block deals, according to that block deal, you've reduced your ownership in Capital First marginally in favor of a long only fund. Now there are two ways to look at it. Promoters are selling out and or a large fund is getting in. Now they both mean different things to me.
Yeah, I mean, first of all, thank you very much for asking this question because it helps me, it gives me an opportunity to clarify to all your viewers. Close to about 5 years ago, I had acquired certain loan facilities to acquire the stock in the first place. And the idea was that we could create value over a period of time, sell the stock and square the loan. And this is exactly playing out in that sense. Even after this sale of stake, including stocks, options and investment in this company or ownership through this company, I still have over 11% of the company or close to it. And I think we really believe that the company is set for good things in the years to come. Now, the important thing to note is that the buyers are long funds, really reputed funds, reputed for their understanding of the markets, and therefore that's the positive way of looking at it.
Okay, Vaidya, hi, morning. Your current stake then stands at 13%. How much has it come down to since this bulk deal?
A little about, maybe close to about 11% or so, a little short of it.
Okay. Would you like to retain your ownership at 11%, or in future we may look at a large right issue which could come in and you would be looking at increasing your ownership?
First of all, I have no plans, let me say in the immediate future, let me say for a year or two or certainly even longer to even sell any additional stake in the marketplace because we really believe that in the longer run we're really building the company for really the pathway is looking really good, and we think that the story is looking very good for the future.
Some of the large funds have been buying into Capital First, the likes of Norges Bank, Goldman Sachs, HDFC, Standard Life, Reliance Mutual Fund. What, according to you, could be the catalyst behind their interest, in your opinion?
First of all, Capital First is addressing a space which is very large. Has a lot of growth opportunity, is largely underpenetrated, and the profitability and profit margins of this industry are looking very good, and the space we're operating is looking very good. And finally, I think for global investors who are based far away, thousands of kilometers away from India, I think for them corporate governance is a really important thing. And I think on that front we score very well because we've got a good board, we've got good accounting practices, and we audit our accounts every quarter. It's a full audit. So I think it gives a lot of comfort to people that in Capital First, what you see is what you get in terms of the book value, in terms of NPA, in terms of asset quality. I think these give a lot of comfort to global investors because these are long funds and they like to keep a position over many years. And we'd like to keep the company that way to give a lot of confidence to our both the long funds as well as minority shareholders.
Okay. I'm going to start with so my next question is a very basic question, which is that NBFCs in last 2 or 3 years, actually 4 to 5 years, they've managed to grow at the cost of PSU banks. PSU banks went slightly conservative, even though they have large distribution, they were conservative, and that turf was vacated, and as a result NBFCs were able to really capture that turf. But that turf also is now getting competitive. Starting from in Capital First to a Bajaj Finance to a Cholamandal to a Sundaram Finance, everybody is eyeing that so-called consumer space. So do you not worry about the competition which suddenly is erupting from NBFCs within that consumer space?
Well, the way to look at it actually is in India nobody is growing at the expense of anybody. The market is really very large, and by any standards, I think at least in the small loan space where you're giving loans between 1 lakh of rupees to say maybe 1 crore or so, this is a very large space, and I think India itself is set to grow anywhere in the high teens, 18 to 20% for maybe decades to come, and that's the way to actually look at it. It's most of India is underpenetrated in that space. We understand that it has its own complications of doing in terms of being able to manage the assets, and we know the numbers from the system. But I would safely say that this is set for significant growth in the years to come.
Right. Whether recently Reliance Capital intimated to analysts that their increased focus on the retail financing segment, especially consumer finance. What is your strategy for growth within this segment, and how is it that you're planning to capture higher market share in the light of increased competition? And also, if you could, really tell us about what the growth outlook is within the lab book, any concerns or, future growth plans. What is it that you have in store, say, for the next 2 years from here?
See, first of all, in the financial services market, actually, sometimes this word market share is, at least in the retail space, is very less understood. Because one market share is what share you have of the existing pie. But in India itself, the pie itself is growing. I think it's largely, as I said, less penetrated. With regard to how we plan to actually approach this, we think that if we identify niches of marketplaces less financed by the existing system, these are big opportunities. Let's take the example of affordable housing. Now, affordable housing is a big space. We all know that there is a huge focus from the government and from the Reserve Bank and everybody on affordable housing. Capital adequacy requirements are much lighter. So these are spaces, if you enter, these are really set for good growth. The idea is therefore get niche, use technology, keep the company asset light, and penetrate deeper and open new markets.
When we spoke to you during that demonetization adjustment, you were very confident that it is business as usual, and the Q3 numbers pretty much are indicating that demonetization did not affect your business. Now that the broad part of the demonetization impact is behind us, we are no longer using the word demonetization, we are using the word remonetization now. What has changed in terms of business, cycle, and the basic alignment in this new so-called white economy?
Okay, first of all, I think at least for the next 6 months or so, I think both these terms, demonetization and remonetization, maybe you should maybe bring it less into a vocabulary actually, because this is genuinely an issue that is gone by. Let me assure you that both on the disbursals front as well as collections front, business is entirely back to normal. That's one. Two is that, if anything, what we have noticed is that the number of customers who were paying through electronic means was up close to about 300% over what it was in November just 5 months ago. So I think there is a certain amount of permanency that has come in consumer behavior in terms of repayments, and that is one significant change. But apart from that, it's generally business as usual. I think we should stop worrying about it.
Closing comments really. And one huge advantage for NBFCs in last 2 years, including Capital First, has been that interest rates in the system, they've come down. But now we are nearing the end of a rate cut cycle, which means the cost of capital is unlikely to go down in the near term. So what happens to the spreads in that case?
Two things. One is that the existing stock of book, which is largely financed from the banking system, is gradually getting replaced by the let me say debenture market or non-convertible debenture market, and that is distinctly cheaper. So to some extent, there is still some play available in terms of repricing the existing stock. Secondly, I agree with you that even if the interest rates reduction cycle plays itself out and maybe it's more stable rate for the next maybe year or so, the margin in the industry is never an issue. The issue is always about managing the asset quality and being able to take advantage of the market growth. And I think that story is just not disturbed, certainly after demonetization also. If anything, we feel that small entrepreneurs, where a lot of people are worried about, they have enough, reserves to live through a month or two. And like we discussed, that story is behind.
Okay, Vaidya, great speaking with you as always. Thanks so much for, really covering all parameters of the business and what really is the business going to look like in the next few years to come. Okay, that's the word coming in from Vaidyanathan from Capital First, talking about a whole host of issues and saying that the Indian market at large is especially for loans around 1 crore rupees. The stake in the company of the promoter still stands at 11% and they have no plans to sell any further stake from here onwards. Let's just check in on what the market is up to. While we're still in the red, 90.60 thereabouts is what we are holding. So that support level of 90.